Hey there, and welcome back to Cosmic Crypto. In this video, I'm going to be talking about a simple way to make money trade in the market, whether it's going up or down. Let's go. Okay, welcome back to the channel. If you're not already subscribed to the channel, please go down below and tap that subscribe button. While you're down there, if you can hit the like button as well, I'd really appreciate it. And just wanted to kind of mention that I've been trading with MEXC for over a month now, I think, and yeah, I think I like it. So I wasn't sure if I was going to recommend this to all of you. Everybody's, shilling Bybit and Femex and all those other ones, and I kind of have those links down below too. But MEXC had reached out to me, asked me to test out their platform. They're trying to get a larger reach in the U.S. area, United States, and so I told them I'd try it out. Been trading on there, been trading Ravencoin, Ethereum Classic, Link, eGold. They got it all. Whether you want to trade futures or not, they got spot trading and futures and a whole bunch of other features. Seems to be working out okay. So yeah, if you go down below in the description, if you want to get a little bonus and use my link down below, I'd really appreciate that. And that's how you can support the channel too. Anyway, so trading the market using a platform like MEXC, Bybit, even just Coinbase, if you just want to do some spot trading on Coinbase or Binance or something like that. There's a really simple and easy way to swing trade. I'm not much into day trading. Most day traders lose money. I've lost money day trading, but I am mostly a long-term investor. But I do dabble in swing trading every so often because it's pretty easy for me to read the market in a swing trade as opposed to a day trade. Day trading, I just don't have time to be looking at my phone all the time, sweating bullets, waiting for the price to move up or down. So I kind of like to trade on the 12 and the 4-hour time frames if I'm going to do any kind of trading. And so I just want to kind of teach you a little bit of a secret here on how to do that. And I've got a couple of indicators that you might want to grab. You can use whatever indicator you like. I've got my specific setup that I like, and then I use the Fibonacci to confirm all my trades. And so just to get started, I'm on the Ethereum on the 4-hour time frame. And what you want to do is I use this CM EMA trend bars. It's an indicator. If you go up to indicators, you can just type in CM EMA. Here it is by Chris Moody, and that's what I use for my 200 moving average. And so if I open up the settings on here, I just put in 200 EMA. And then what this does is it changes the bar colors. Now you can have the EMA be change colors as well. I just like to have it white. But what happens is whenever the price goes above the 200 EMA, green will show. And when it's below the 200 EMA, red will show. And usually the 200 EMA is kind of a general indication of whether the market is bullish or bearish. If the price is underneath the 200 EMA, that usually means that the price action is going to be bearish and it's going to fall. If it gets above the 200 EMA, the opposite means it's going to go up. The other indicator that I like to use is this Trade Pro rejection zone indicator, and it's just 2 EMAs is all it is, but it colors the EMAs in a cloud form like this, which I kind of like just for my personal preference. I usually take off the fast moving and the slow MAs, which are just these lines here. Keep the colors red and green, and then on the inputs I use 20 and 50, or you can use 100, either one. So you can use 50 or 100 on that one. The 100 just makes the cloud bigger, something like that. And then the last but not least is I like to use this trend strength direction indicator, which is what I've been using quite a bit lately. So go into trend strength directional indicator by Beehole. Right here. And I like this one. It's kind of a knockoff of Market Cipher. It's a paid indicator that you can get. Just has the waves, the dots, and then the money flow. So the waves kind of just tell you, the momentum of the market, whether it's going up or down. The money flow is the green shade or the red shade here. Just tells you if the money's out of the market or in the market, in the specific coin, that is. And then the dots just tell you that there's a possible reversal coming, something like that. And so I like to use the dots the money flow, the waves, and then the key to this entire strategy here, and I don't know that it's considered a trading strategy. I mean, I guess it is because I use it to trade, but is the Fibonacci. So you can find your Fibonacci on the left-hand toolbar here. Just go down, look for Fibonacci retracement, or hit Alt-F on your keyboard there. And I like to have mine just right up here in a quick, what do you call this? A favorites bar up here. And so what you can see, what I'm showing you right now, is that the market had been falling. So we were under the 200 EMA. We've been getting rejected off the 200 EMA, and then getting rejected off the 20 and the 100 EMA multiple times. And but we continued to get lower low, lower low. This was a higher low, but then you ended up getting rejected here. But you can kind of get a sense of when the market is changing. Now, if you're very aggressive with your trading, once you get down into this area right here, you could probably start putting in some trades. You can see that the price action is getting further and further away from the 200 EMA. And you can see that the cloud is getting larger. And usually when that happens, the 200 EMA and all these EMAs act as a magnet of sorts. So when you start to see the cloud getting larger and further away from the 200 EMA, that's kind of a sign. As you can see here, the cloud was getting larger than the 200 EMA. The price didn't go back to it, but it went sideways until it got closer to both. And so it acts as a magnet. So when we got this big drop down here, and we came back and we retested this 100 EMA here and fell, what happened with these larger swing moves, the largest swing move would be like, you can tell that this is a bottom of sorts. This you can consider a bottom right here. And we could actually look at that here in a second with the Fibonacci. And then this is a bottom, this is a top, a top, a top, and a bottom. And I mean, you can kind of pick them out. It's fairly easy to pick out the tops and the bottoms of these swings. And so what I like to do is I'll take a Fibonacci. And so from down here, if we're going to try and long our position, I'll show you shorting here in just a second, but if we're going to try and long our position, you'll take your Fibonacci from the bottom swing, and let's just go to this top right here, and we'll go to the top. So once you see, and don't worry about all the stuff on the right-hand side here, because obviously that we're doing this in history, so this wouldn't be here. But we will take this move right here, and you'll see that we created a higher low right here. And what that is telling me is that the bulls are starting to gain momentum into the market because we did not crash down below this low right here. The other thing that we did is this is considered a golden pocket right in this area here between the 382 and 618 Fibonacci. And that's usually a good sign. If you can get a reversal in this area right here, that would be a good sign to either go long or short, depending on the direction of the market or what kind of trade you're trying to make. Another thing that I like to look at is after we figured our bottom, figure out a top, and then we are trying to find a reversal here. Now, we could see that we had found some support right here on the 236, but I wouldn't have entered a trade here because, first off, it's the 236. It'd have to be a pretty bullish move to bounce off the 236, and since we're falling in a bearish trend, that's not a good spot to enter. But also you can tell here, this is what the trend direction indicator is telling us, is we got a red dot here right at that candle there, which is telling me that we've got some further to fall. And so what I'm waiting for is for us to find some kind of support, and then once we get, I don't exactly need to wait for this green dot. That would be the kind of the conservative move, would be to wait for the green dot. But that's telling me that we're starting to get a reversal here. And what it's also telling me is we got this green dot, but we also had found support around the 382, just underneath it, into the golden pocket here. And we're starting to make a move to the upside. So if I were to make this trade right here, I would enter my position, because I'm sort of conservative on my moves, but also I'm a little bit aggressive at the same time. I wouldn't have waited for this green dot here. I would have probably entered my move right here at this candle opening right here. And if I would have done that, if I closed just at this next red dot right here when it came, if I closed right there, actually let's go to the bottom here. even then, if I closed at the fall of this move right here, that would have been a 10% trade that I would have got. And if I'm using leverage, that could have been anywhere from 100% move, 200, depends on how much leverage you're willing to use. And if I were to enter this move right here, I would just put my stop loss, make sure you use a stop loss, either below this previous low right here, or I'd use it below a Fibonacci line like the 0.5. And I'll show you when we get to when some of these moves hit the 618, where you might put a stop loss. You could put it right below the 618, or you can put it down below the 786. Just have something to, some kind of support be above your stop loss. So even if I got out right here at this red dot, that's what I'm going to be paying attention to. That's still a 10% move. Now, if I waited until it came up and hit this 100 EMA, then I could have got away with, and that would have been a lot more aggressive. Then I could have got away with a 16% move. And you got to decide for yourself whether that extra 6% is worth the possibility of a rollover, especially since we're not in an uptrend right here. We're in a downtrend. Now, a lot of people will tell you don't trade long positions while you're under the 200 EMA. And that's a pretty wise thing to do. But if you're comfortable with the Fibonacci, using this trend directional and understanding the EMAs, which I am, and so sometimes I like to make these moves. I don't always do long positions while we're falling, but sometimes if I notice higher low here and I just want to get like a quick, 10% move or something like that, these aren't going to net you spot, 100% moves. You're going to have to use leverage to get 100% moves out of these. So then what we're going to do next is we found a high here. And it's also good that we're getting rejected at this 100 perfectly, which is telling me that we're obviously going to go back down. And plus we got another red dot here. So we got two red dots. The waves are already high. And so there's a good chance we're going down. So we found our high. So let's go here to here. And this would have been a failed trade. Because if you did this, obviously it broke right through. But you can tell we had found some support here at the 386. We did get this green dot right here. But this is where you got to use your judgment is not only are we still in a downwards move in the larger picture, we're underneath the 200 EMA, we're falling. But how do I put this? The bullish momentum is not strong enough to be bouncing off the 382. Even this one right here bounced off just underneath the 382, and we did get the green dot, but and the money flow was starting to move upwards. This time the money flow is starting to move downwards. Anyway, what I'm going to do is I'm actually not going to use this low. This was actually a bad low, and this is I probably wouldn't have taken this trade. I'm just kind of pointing this out, but I probably wouldn't have taken this trade because I don't like that position of that low. And the reason why is because if we're going to get a reversal, the more likely chance of us holding the 382 is not as likely. What is more likely is something like this. So from this bottom to that top, where we had a solid rejection of not only off the 100 EMA, but now we have found a very easy to see top right here. And now what you can see is we've come back down and we've held this 618 as support. Now this is the golden spot right here for me. The 618 is where I love to trade off of. So if I can find a bottom, find a top, and it comes back down and we hold support at this 618 multiple times like it's done, this is a perfect trade for me. And this one would have netted some really good gains. And so, as you can see, we even came back down to retest it. But the way that I use my strategy here is I'll wait for that 618, which is telling me that we've got a good chance for a reversal coming because we're continuing to make higher lows. We got a low here, a higher low here, and now we've got another higher low here. It's just barely, but it's still a higher low. And so I probably would have entered a trade right in here. And then I would have set my stop loss below the 786 as a support. Now, I actually would have probably gotten out of this trade probably right around this area here, right at the 100 EMA. Once we came up and touched this 100 EMA, I would have exited the trade. I wouldn't have even waited for the red dot. I would have got out of the trade because not only am I doing a long position while we're in a downtrend, So I'm going to be very conservative with my exits. But even so, from down here at the 618 up to the 100, that's a 13-14% move. That's good enough for me, especially in what kind of position we're in here. Then what happens is we get this move down here, and let me move the Fibonacci here from this bottom to this top. And as you can see, we've come down to the 786 now. And we're starting to move sideways. If you look at this, we've got some tops coming in here. We've got bottoms coming in right here, and we've got some sideways action, which is telling me that either we're going to get a big drop down, and this is creating some kind of a bear flag, or we're going to reverse and go back up above this 200 EMA, which is where you really should be taking your long positions if you're new to this, is above the 200 EMA. But now that we've found support at this 786 on multiple candles, I probably would have entered my trade on this one right at this candle right up here, because we went below the 786, we stayed below it, then we broke back above it, got a higher candle above it, another higher candle, had a large wick, but the buyer stepped in and pushed us right back above the 786, and then we held the next candle above the 786 again. So this is where I probably would have entered my trade, and I would have set my stop loss below this low right here, this wick. And as I entered my trade here, I would have exited most likely at the 200 EMA right here. So I would have entered my trade right here, and let's get the percentage on that. I would have exited my trade right here at a 16-17% move right at the 200 EMA right here. Because most likely you're not going to break through the 200 EMA, especially since you haven't tested it before in a long time. You're not going to break through on the first try, and we didn't. We got pushed back down. But what happened is now we've retested the 20 EMA right here, and if we take a Fibonacci from our new low to the high, we haven't reached the golden zone right here, and actually probably I'd use this low right here. Or even you can use this low right here. But I like this low right here, and actually the price action is telling me that that's the right move. And the reason why that's the right move is because we're right into the golden zone. We get this large candle up, and then we break above. No, I wouldn't have taken any trade here because I'm not really sure what's going to happen. We could get rejected. This is not very good price action for me to take a trade. But what I would have taken a trade is probably this next one. And let's see. So from the bottom here, we found a new bottom at the 20 EMA. Now we've got some green candles. So this is where we should be taking our first longs if you're conservative. And this one worked out perfect. So we have a new high. We've got our low. And we have been trying to break down below this 382 for quite some time. And I probably would have actually taken my trade right here. I probably would have missed this because I would have expected this move to come down and touch the 20 EMA, but it didn't. So I got this candle up here. So this is where I would have taken my move right here. And it turns out that that's where the green dot came in as well. And I would have gotten out at this red dot right here. And so this to the red dot would have been a 7% move. Now you're saying that doesn't seem like much, but remember this is spanning over time. This right here, let's just see how many days this is from where this trade I would have taken to the exit. That's exactly 1 day. And so you just, you don't have to pay attention to your phone too much. You just kind of pay attention. You can set an alert for when a red dot or a green dot comes in and lets you know, and then you'll know to get out of the trade. But that's probably in 7%. Let's say you're using 10x leverage. That's a 70% move right there. That's pretty good. And so then what I'm going to do next is I'm going to continue to ride this wave all the way up. And so I'm going to find my low, which is right here. I'm going to find my high. And now what I'm waiting for is we've come down, and this is a wick. This is a candle right here that I would take a move on. So we came down, we touched the 0.5 Fibonacci. We're also getting a nice wick to the bottom, and it looks like a reversal is coming here. And so I would have opened my trade right at this candle right here, set my stop loss probably below the 618, and now we're looking at a move, if I caught this to the top, of 10%. And that actually is, if I wanted to get out at this red dot here, then I still would have got at least a 3% move. But you know, if you can use a Fibonacci as well to figure out where you're getting out. Let me show you that really quick. You can go from the top here to the bottom, and you can, I always get out of my trades at one of these two locations, the 1272 or the 1618. And so it didn't reach it. It had this big engulfing candle down, and so this is where I most likely would have exited. And if that was the case, that is almost a 6% move, which doesn't seem, I keep saying it doesn't seem like much, but when you keep adding these up, just in 3 or 4 days, I think I've had roughly 50% on just spot trading. And if you had any kind of leverage, like 10x leverage, now that's 500%. Now we're going sideways for quite a bit. And you can tell that because you put this low to this high. And I mean, you could have even done this move too, I guess, but we're at the 786. It's getting kind of weak. So obviously the price action is wanting to push down further because we're not able to hold this 618. We're falling below the 618. We're even piercing below the 786. So the bulls are losing momentum here. And so we're waiting for the next big move. And so we got this down here at the 200. And that right there would have been my next. And since we got a nice bounce off that 200, if you're doing price action trading, this would have been a great place to get in on a long position, because just like, you know, right around here, there's usually a rejection of some kind at the 200, whether that's down or up. And so anyways, let's say we didn't get that, and we're going to use our Fibonacci's here. So we'll go from the bottom to the top. Let's move this all the way across, and we get down into the golden zone. We come up, and we create a higher low right here. And we're still holding above the 100 EMA. This is where I get into my next trade right here, because I could have got in right here if I was a little bit more aggressive. There was also a green dot right there that came in on the momentum wave. But seeing this one right here, and I mean, if I was aggressive, this would have been a good move too. But seeing if I missed this and I see this one, this is ideal. You got a higher low, okay? And the momentum looks like it's about to turn over again. So you get in right here, and then you get out. So this is where I enter. Now, if I want to be super conservative, I'd get out at the red dot there, get a 6.75% move. Or I could, another thing you can do is just set your stop loss, let it ride, and then continue to move your trail your stop loss up, and then ride this entire wave. But if you want to just continue to jump into more secure trades, like this one again right here, we go from that bottom to that top, you get the 618 right there. That's my perfect trade right there. Is it comes down, it holds the 618 perfectly. You get a candle that doesn't touch the 618 again, so you move in right here or right here. And also you get a green dot coming in down here. And then you ride that wave up to the top there. Now this works both ways. So you can do this going up, you can do this going down. Now what happened here, we fell below the 200 EMA. And normally when you do that, that means that the run is over. And so I'm going to grab a Fibonacci from the top to this bottom here. And we made it into the golden zone here. We're getting a rollover, and the moment we broke back below the 200 EMA here is telling me there's weakness to the upside and strength to the downside. So I would enter my short position right at this candle right here. And even if you wanted to be the most conservative, you can get out just where it begins right here. So right here, this would have been an 8.5% move if you get out right at the previous high. If you don't want to take the rest, if you don't want to take the chance, you can get out at the previous high, or you can ride it till you get to this green dot here, which would have only netted you just a little bit more, roughly 10.5%. So you would have got 2% more out of it. But you can be extremely conservative and get out and win more, probably win more trades just to get out right at the previous high. Okay, and so now we can go and we can do this one right here. And we see that we're breaking through. Now again, you could take this trade right at, you can put a short position right at the 200 and get this move down to here. be a short move. Those are risky, but we're breaking through the 618. We broke through the 786, and so these are nothing here is looking good to me for a trade. And we're going to continue on. Now again, we broke below the 200. Here's a new high. So we're going to grab this right here, go to that right there, and let's zoom in so we can see this a little bit better. Not only, this is a perfect move right here. Not only do we break below the 200, we've come back, and now we've retested the 200 with multiple candles, and none of them can break through. Not only that, we're inside the golden zone right here. I take this trade at the 200 EMA easily. And if you held this trade, unless you wanted to just be conservative, you can still get a good move here. But if you held this trade, this is a fantastic move all the way down. If you held the trade all the way to 23% move, if you didn't, you got out at the previous high right here, very conservative. That's still a good move because now you can go from this high to this low. And you can tell that the momentum is to the downside because we're not even reaching the golden zone. The bearish presence is pushing us down so hard that we can't even get into the golden zone. And so once we get back into the green here, I take the trade right here and I take it down. And then now we're getting pretty far away from the 200 and we're getting a very large red candle. So what happens then? Either we come back or we go sideways. And that's exactly what we've been doing, is going sideways. And that's kind of the gist of it. Again, you just use some simple EMAs, you use some simple price action, and you use the Fibonacci and use that golden zone to your advantage. The best moves you can make is from a low to a high and finding support at that 618. If it can find perfect support here, you could skip any other trade and just wait for the trade to come and touch that 618. And then you set your stop loss at the 786, and you can ride that wave all the way up. I mean, 25% move right there if you took that entire move. Pretty solid. So just a very simple, basic way that you can use Fibonacci's and EMAs to get some trades in, make some money during a bull or bear market. It doesn't matter. If you got any questions about how this works, please leave your questions down below in the comments. If you like these kind of videos, please let me know as well, because I'll make some more of them. And just remember, not a financial advisor, just a dude on his computer. Talk to you later.